I'm actually very bullish. Now, the recovery from a bear market either comes two ways. Either it comes up, corrects, and then eventually goes, or it comes sharper. It depends on central bank action, liquidity, that kind of stuff. But if I look forward, I'm very bullish because we've just gone through the rate cycle, so that's out of the way. So we've got the downside.
In a recent interview on the Real Vision YouTube channel, Raoul Pal, a former Goldman Sachs executive and CEO of Real Vision Group, shared his thoughts on the economy for 2023. Despite his belief that a recession is approaching, Raoul expresses a bullish outlook for the future. He delves into various aspects of the economy, including an analysis of Tesla and Elon Musk's investments. One of the key concerns amongst experts and analysts is the potential for a recession in 2023. The Federal Reserve's efforts to curb inflation seem to have had some effect, with a cooling labor market and a decrease in housing prices and new construction. However, this slowing of economic activity comes with a cost. According to a December 2022 survey of economists by Bloomberg, there is a 70% chance of a recession in 2023. It's important to note that recessions often have disproportionate impacts, with some cities potentially taking a decade or more to recover. While economists have been forecasting a recession for some time now, the depth, duration, and timing of it is still open for debate. However, the consensus among economists is that the economy is heading towards a period of contraction. With that all being said, Raoul remains bullish and confident on the future of Bitcoin and the crypto market going into 2023. Here's more of what Raoul had to say, but before we do that, if you like finance videos, please support our channel by liking the video, subscribing, and dropping your questions or comments below.
The inflation weight is less, and therefore the rate of change of interest rate increases. The Fed are making it pretty clear they're probably going to go to 25. So it's, as you know, in global macro, it's the rate of change that matters more than anything else, not the absolutes. So if the rate of change changes, all of these beach balls start popping out of the water that have been held down by the heavy weight of interest rate rises and that rate of change. That's all gone. So suddenly, emerging markets go up, gold goes up, crypto goes up, equities go up. That whole story. I don't know what the BOJ is doing. I've kind of lost track of them. I almost kind of for it because people over focus on Japan, and in the end, it's still pretty contained. It's not like they're going to let rates go to 2%. So, and are they going to? I was having this conversation with Julian Brigden earlier on the Insider Talks. Are they going to let it all go and just give up yield curve control and walk away? I mean, no, they've just widened the band. Why would they suddenly decide, oh, you know what, we're just going to let interest rates run wild in Japan now and completely destroy everything? So, but interesting market overall. I mean, it's been a very risk-on week, very risk-on. Foreign buyers of assets. So it depends where their capital flies to and what happens. The yen has been screaming higher over the last few weeks and stuff. So I don't really know. I do tend to find that if every hedge fund is thinking there is a special event of which they know something about and nobody else does, it usually means that everybody knows about it. It's, when you've got a lot of people all talking about one event risk, that event risk is priced. So I think it's relatively priced. I don't know. And I think it's only at the margin it really affects US bond markets and European bond markets. So again, I've tended to find that the market has overtraded Japan as a global story. And I found that it hasn't had as much impact as people expect. It's at the margin impact. I don't know. What do you think? So think of that beach ball, right? There was another weight on the world, which was the world's largest trading economy was closed. So if you reopen, then the beach ball rises. So anything that has Chinese exposure is going to see a net marginal increase in demand from where they were. So I think it's just that. The question is does China coming back into the world economy mean anything yet to the global economy? My tendency is to think that China, again, we'll talk about this later, the Chinese credit cycle, the Chinese money supply tends to lead currently the Western world by about 12 months. So I think if we're thinking of what's happening now, then we've got a 12-month lead time before it starts filtering into the rest of the world as well in some respects. So And the rest of the world, the impact on the rest of the world, people are like, well, China's opening commodities. It takes time because the Western demand is still going down. So it's really going to make a difference to the commodity market that so many people are looking at is when all three engines are firing. Europe, China, US. When those three fire, then you've got a potential long-lasting commodity rally. But without it, you've still got one or two of the legs of the stool missing. Anybody's been paying attention has seen what happened to AI. It went from me interviewing Emad to say, oh my God, this is coming, to ChatGPT, to everyone thinking, oh shit, we're out of a job within 3 weeks. I mean, that ChatGPT went from 0 to 1 million users in 4 days. We've never seen anything like it. And it keeps crashing. There's so many users on it. So that's the technology, and we've got tons of these coming. The energy situation that you've been following so closely, the nightmare in Europe didn't pass in the end. It's, we saw what was bad, but, the Peter Zeihan's of the world and others were like, the Europeans are going to be having to be chipping frozen corpses from the streets. That doesn't look like that's happened. Nobody's run out of energy. Yes, there's been some rationing and stuff like that, but it seems to be contained. So also investors were so negative that I've got charts going back to the 1970s, the AAII investor intelligence survey. It was the most negative since 1970 or something crazy. So usually when all of those things happen and we've got liquidity returning, market's pretty positive. So I love this series because I think everybody's looking that way, and that usually means the opportunities to look the other.
Thank you for watching our video. For more finance content, don't forget to like the video and subscribe to the channel. And remember, when in doubt, just hodl.